Welcome back. Yesterday, we brought you our America Invest Together virtual town hall. Special guest was Barstool Sports founder Dave Portnoy. And, well, you sent us some amazing questions, right? But as is always the case on live TV, we couldn't get to all of them. So going to answer as many as we can today. And I brought in David Nicholas from Nicholas Wealth Management to help me out. So let's go right to the first one. Video comes from an individual in the Sunshine State. Patrick, let's take a listen.
Patrick Goss, Milton, Florida. I'm a bit concerned about market uncertainty. As an individual investor with only a retirement account, should I take this year's profits now and then jump back into the market once the election winner is determined?
Well, I will say there's certainly a lot of profit taking today for sure. Now, I normally take profits on most positions on the way up. And I got to be honest, I'm frustrated as heck when they keep going up. But yesterday, we actually took profits on PagerDuty. That's down 30% today, so I feel good. Listen, remember, XYZ at $50 is not the same as XYZ at $20. And I preach this all the time on this show. If the fundamentals haven't changed, then that means the stock could be overbought. That's something that you have to monitor. David, how do you handle these situations?
Yeah, it's a great question, Patrick. And look, I get the sentiment, the concern. You know, my mom was a single mom. She had a retirement account 20 years ago during the tech bubble. She took a significant hit. I saw the pain that caused, so I get that. But I added to that fact, it's very hard to time the market. Some of the best minds on Wall Street can't do it. I think Charles can do it effectively, but that's probably about it. So for me, I like taking a balanced approach. You got to take your risk and age into account, but you may want to consider taking 50% of your account off the table if that gives you a little bit more peace of mind, but it also gives you some dry powder to be able to buy back in the market. Because remember, March 24th and 25th of this year after the rally, the market jumped almost 20%. So if you're trying to play catch up after the election, you might miss it. That's why I don't like the approach of being all in or all out.
All right. Now, after watching the show, I got a question from Joyce. She says, I am 53 years old and do not know anything about the stock market and even who to speak to for understanding. Can I use my 401k retirement to invest in stocks? I would like to do something where I could make money now as well as without having to wait on accessibility when I retire. Can you help me and point me in the right direction? Don't have a lot of money in retirement either. I need help. Yes, you do. Well, typically, I got to say something. You cannot buy individual stocks or bonds for the most part in 401ks, which, by the way, I wish they would amend. And listen, you should be able to buy individual stocks in the S&P 500, for instance. But be that as it may, you can try for more targeted exposure with ETFs. The good news is that 401ks and many of your employers are also matched your allocation. For most folks out there, know it's capped at $19,500. In your case, though, Joyce, you can add an extra $6,500 as a brand new provision for people over 50 to catch up, and you clearly need to catch up. David?
Charles, great points. And one thing I'll add to that is, balance or target date funds are kind of you don't have to think much about it. So you can line up your age with a target date fund. It's going to buy back more in the market and reduce your exposure every year. But one last little quick thing. If it's an old employer where it's an old 401k, you can actually roll that to an IRA, and that's where you can invest in individual names. So current employer, Charles, you're right. But if it's a past employer, you do have that opportunity.
Great point. Pamela P. is asking, my parents started investing in the markets in the 80s and have built a considerable portfolio of which they receive quarterly dividends. I am their only child. There's so much talk about the upcoming election, how it's going to impact the market. I'm concerned about the future dividends. I would appreciate any advice. Should I ride them out? Should I stay the course? Should I make short-term changes? I got to tell you, dividends are intriguing, right? I would say if you like getting those payments, hang tough, hang with them, right? But do an inventory of the companies, because some of these companies have stopped paying dividends this year, and some may not be able to. They may not have the cash flow. So that's just something you have to worry about. And also, David, a lot of people worried about the elections. I haven't taken that into account. I do believe, though, I will have more cash for my subscribers as we head into November 3rd, rather.
Charles, I think that's prudent. I think you're doing the right thing there, because the idea would be is there's a better opportunity to take advantage of some of these names. But I look at dividend stocks like quality real estate. If you have a real estate property where the tenant's been paying you rent every year for 25 years, the real estate value may go down. But are you going to go out and sell your real estate property if you're getting that rent payment every single month, month over month? I look at dividend stocks the same way. So as long as, like Charles said, these are quality companies, you should be just fine.
David, thank you very, very much for that. Now I know why you're so conservative. You never gave us a secret before. Now we know. Thank you very much.